Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of Khadim India Limited, hosted by MUFG Intime IR. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Bagwe from MUFG Intime IR. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and welcome to the Q1 FY26 earnings conference call of Khadim India Limited. Today, to discuss the results, we have with us the management, Mr. Ritik Roy Burman, the Managing Director, and Mr. Indrajit Chaudhary, the Group CFO. They will take you through the results and business performance, after which we can begin the Q&A session. Before we begin the conference, I would like to mention that this conference contains some certain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. The actual results may differ materially. These statements are not guarantee of the future performance of the company and involves risk and uncertainties that are difficult to predict. I now hand the conference over to Mr. Ritik. Over to you, sir.
Yeah, thank you. Good evening, everyone. On behalf of Khadim India Limited, I am pleased to welcome you all to today's conference call, where we will be discussing our Q1 FY26 results. We sincerely appreciate your time and interest in our company's performance, and we hope you have had the opportunity to review the financial results and investor presentation available on the stock exchanges. The first quarter of FY26 brought a mix of external factors, including unpredictable weather and certain global developments, which had some impact on overall consumer sentiment, resulting in muted demand during the quarter. Despite these headwinds, we remained focused on executing our strategic priorities. For the quarter, we reported a revenue from operations of rupees 957 million. This was primarily impacted by a decline in franchisee sales, which we are actively addressing through targeted interventions. Gross profit stood at 456.4 million, with a gross margin of 47.7%. The margin was affected by promotional discounts offered during the quarter. It was a tactical move to support volumes in a soft demand environment. In line with our strategy to strengthen our brand portfolio and enhance consumer offerings, we entered into a strategic partnership with Skechers during the quarter. This collaboration enables us to offer Skechers footwear at selected Khadim stores, adding a globally recognized brand to our retail mix and reinforcing our commitment to delivering value and variety to our customers. We also launched our new athleisure segment, which marks an important step in our product diversification journey. This segment is designed to cater to the growing demand for lifestyle, comfort-driven wear. Looking ahead, we are optimistic about the upcoming festive season, which is arriving earlier this year. We anticipate a pickup in consumer demand and are preparing to capitalize on this opportunity. Our focus will be on scaling our sub-brands, British Walker and Sharon, both of which have shown encouraging growth trends and strong customer resonance. Now let me walk you through our financial performance of the retail business for the quarter. Revenue from operations stood at 957 million. Gross profit was 456.4 million, with a gross margin of 47.7%. EBITDA for the quarter came in at rupees 123.3 million, translating to an EBITDA margin of 12.9%. Profit after tax stood at rupees 8.6 million, with a PAT margin of 0.9%. Our retail footprint at the end of Q1 FY26 comprised 884 stores, including 207 company-owned outlets and 677 franchisee stores. Sales through e-commerce channels contributed 1.34% of total revenue for the quarter. While this channel remains a small part of our overall business, we are actively working on enhancing its contribution through improved logistics and digital marketing initiatives. As we move forward, we remain confident in our strategy and proactive approach. We are committed to building on our strong brand equity, optimizing our retail network, and innovating across product categories to meet evolving consumer preferences. We believe these efforts will translate into improved performance and sustainable growth in the quarters ahead. With that, I conclude my remarks and would be happy to take any questions you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Arnav from Ambit. Please proceed.
Hi. Thank you for taking my question. So my first question is, could you please provide an update on the listing of KSR Footwear?
We have already submitted the application to the BSE and NSE. It is now the BSE will come up with any questions. So if they come with questions, then we will reply to them. I think by the end of this month or early September, we'll have a approval from BSE or NSE.
Okay, sure. Thank you. And so my next question is with regards to the discounts that we have been offering in Q1. Given that the government has now announced that it will likely make a GST rate cut, will we be stopping our discounts in these coming quarters?
No. We will continue with the discount because when the GST will be effective, we do not know at present. So during this August,
we will not give in the festive time, and then as per the market situation, we might have to give discounts in future. As per the what the economy is or how the customer inflow is, we are having to give, like I said in the speech also, to protect volumes etc. in a soft demand environment. The festive season we aim not to give, but after that, as per the market trends, we would give or not give, which we cannot say now.
So then, as per that logic, then in Q2, should we be expecting a similar gross margin, or can we expect some improvement over and above the current level of 0.7%?
Discount in Q2 will continue till 31st August. After that, the festive season will start. So where there will be no discount. So it will be a little bit, margin will be little bit improved from the Q1.
Okay, thank you.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and one on your touchtone telephone. We take the next question from the line of Akhil Parekh from B&K Securities. Please proceed.
Hi, thanks for the opportunity. So again, on the gross margin front, right, historically we have done 55-57%. Despite the consumer weakness in past, any specific challenges we are having, and is it also to do with the clearance of the BIS inventory basically? That's my first question.
No, this gross margin down, I think it was around 53% in the last quarter in the FY25 first quarter. So mainly it is impacted to, one is that we have taken a price cut in Khadim product which has nearly contributed around 2.5% margin down. That we have already told in the last year that we will be taking a price cut to have an improved volume growth. And secondly, this because of this discount trend which has been done, because last year first quarter we have our contribution of discount sales was around 18%, but this year the first quarter our contribution of discount sale is around 33%. So both of these together has impacted the gross margin. But in the next quarter there will be improvement in the gross margin because the festive there will be no discount. But during the third quarter and fourth quarter, depending on the market, we have to decide on the discount, and the margin will remain more or less in the range of 48 to 49.
Okay. So it is slightly contradictory or contrary to what you had highlighted year and a half back before the demerger process had started, right? We were confident of achieving 18% of EBITDA level margin, post-index margin for the retail business. But it looks like it might not happen for this year.
No. If you see the sales, the EBITDA margin, the sales from the first quarter has come down around 10 crores. So had it been the same sales, we have achieved around 13% EBITDA margin. But had been the same sale, 15 to 16% was easily achievable. So if the value of the sales remains constant, then again we have the potential of doing around 16% EBITDA margin in retail business.
Sure. And second question, in the opening remark, Ritik highlighted that there was some franchisee sale weakness. Could you just elaborate on that point, like what exactly has happened?
Because since the franchisee sales in the secondary sale of franchises has already is dipping, so the primary sales from our side was little bit less compared to the last quarter. Because otherwise it tantamounts to holding stock at the franchisee level. So for that reason, we have deliberately done a less sell to our franchisee, primary sales less to the franchise.
Okay. So the inventory levels are slightly on the higher side at the franchisee, and hence the weakness.
Yes.
Yeah. Okay. And just last two questions. One is on the BIS inventory front. Have we cleared everything on the non-BIS inventory, or it's still pending?
We have cleared all the BIS. Some element will be there, but now we are giving good discount, so it will be liquidated if there is some non-BIS.
Okay. The last part is already cleared, basically.
Yes.
And last one is GST front, right? The current GST rate is 12% for products up to 1,000 rupees, right? That was increased from 5 to 12% some 2 years back.
January 20.
January 22, yeah. So what percentage of a portfolio is below 1,000 rupees?
Below 1,000 would be around 70%.
Yeah. Okay. So that can get a big boost if the GST rate drops from 12% to 5%, which is what the anticipation is.
Yes, but there would be some if the GST rate is dropped, then we have to the price reduction will have to be there also. So that once this is done, then we can have a fair sight of the situation.
Sure. That's all from my side, and best wishes for the coming quarters.
Thank you.
Thank you. Before we proceed with the next question, participants, in order to ask a question, you may press star and 1. We take the next question from the line of Dipan Narayanan from Trustline Holdings Private Limited. Please proceed.
Good evening, everyone. Thanks a lot for the opportunity. So firstly, from my side, the price cuts we have taken on Khadim brand. So what kind of volume improvements we are already seeing, and are we hopeful of volume improving further in coming quarters of Khadim brand?
Like what we said, like we have actually not built so much to the franchisee, so that's why there was a little bit of a volume. If we look at the business to business wise, we have franchisee, we have retail. So in franchisee, since we have not built, so the volume, there was a little bit of a degrowth. But since we have not done the primary sale, but in retail, we have seen encouraging growth numbers in the, the lower price points like 0 to 499, and also in the Khadim's brand also, the degrowth has actually become almost like, it's become like no degrowth in the Khadim's brand. Previously, we used to have double digit stuff like that. So now it's almost like no degrowth. So just because we franchisee, we did a little bit of less billing this year first quarter, keeping their stock position in mind, the debtors and all in mind. That's the thing.
Okay, so
by price cut, the degrowth in the lower segment price point has stopped.
Yes.
Okay, so what is the kind of volume growth do we expect in coming quarters, even during festival season, from the Khadim brand now?
We can expect a decent growth. I mean, to put a number like that, it becomes very difficult. But like I am saying, that the degrowth has been arrested. There's a little bit of growth also in the lower price points. So we hope that will continue. And now that in the first quarter, as we said, the customer footfall was a bit less. So expected if the customer footfall increases, and when more customers will come and buy these products, there should be a decent amount of growth in the Khadim brand, and especially in the lower price points. The main point being there has been growth in the lower price points, volume growth. And there has been a lot of growth due to discount also. There has been pairage growth because of that also.
Okay. And this new partnership we announced with Skechers, so can you throw more light on this partnership, and what will be the impact on growth and margins kind of this thing?
Yeah, so Skechers we recently started, I think we started in July. June, sorry. We started in June. So we have kept it at the moment in our high footfall stores, 10 stores, high footfall stores, and the response has been pretty decent. And so we are waiting and watching this latest introduction. But we are happy to see that customers are coming and buying these. Skechers is a great brand. It's a great, their sport shoes are very, very widely accepted, and it's a new thing for the Indian customers also. So our customers are coming and buying these articles from our high footfall shops. So we expect this thing. We cannot put any numbers right now, but the higher price points in our sport shoes merchandise category, the sport shoes one, the higher price point part of the sport shoes merchandise category should be have a good growth. That's all I can say for now.
Okay, so what is the kind of arrangement we have with Skechers? So is it commission-based sale, or it's a store usage? Sorry?
It's a buy and sell. We bought certain designs from them and we are selling it. They have given a discount from MRP, and we are selling it at MRP, or some articles is discounted also. So that way it's happening.
Okay. So in future, the average bill value per customer could increase where these products are present in the stores, right?
Yeah, it should increase. Some of the stores, the degrowths and all have been, after introduction, have been lesser. So we
Okay.
expect while festive season also, when people have more, people are in mood to spend more, maybe they will buy these products even more than what they are buying now. Okay.
But the margin
Okay.
for the Skechers product will be comparatively less than the Khadim margin.
Okay. Okay. And
It may,
how
yeah, continue.
how many stores currently we have kept Skechers now, and what is the plan to ramp up this in during festival season and coming years?
We have kept in 10 stores now. So
Okay.
we'll be ramping up after the festive season. We'll see, we have invested in certain amount of stock, right, for this. So
Okay.
we are planning to liquidate that, and then we'll plan again after the festive season. Right now it's only in East, so we'll start keeping the stocks first in our high footfall stores in South, etc. So that would be the plan for now for Skechers.
Okay. And what is the kind of athleisure segment contribution during this quarter?
Athleisure contribution, it's at a nascent stage. It would be 1-2%, not more than that. But we have increased some stores recently, so we should be able to see increasing numbers soon.
And any specific contribution from the sports shoes for Khadim brands?
Sports shoes, again, the lower price point sports shoes have done pretty well, actually. In the pro sub-brand of Khadim's, there are some lower price points which we introduced last year in November. So that has done well, below 1,000.
Okay. Thanks a lot and all the best.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1. The next question is from the line of Abhishek Benkar from Genuity Capital. Please proceed.
Hello. Yeah, am I audible?
Yes, yes.
Yes. Thank you for the opportunity, sir. One of my questions have been answered, but I just wanted to ask, are there any such types like Sketcher type in the process, or are we contemplating there may be some more such type?
Oh, we have done another small tie-up, which we didn't mention, but it was quite small. Like for the monsoon season, we have kept, there's a renowned umbrella brand in Calcutta, so in Bengal. So we have kept some of their umbrellas in our shops during the monsoon season on SOR basis. So that gave some, like, it's minuscule, but yeah, we have just kept it so that while monsoon seasons and all, people want some umbrellas, they can come and get from our high footfall shops. So we have done that and this.
Okay. Yeah, and also, what are our expectations from these types? So these types will, become big in future? Like, what is our expectation?
These are mainly strategic types, means whatever product that are missing in our retail outlet, so for that we are keeping. But the product that means Khadim is providing or through its sub-brands, will not go for any tie-up in that segment.
Okay.
Yeah, these tie-ups get a separate set of customers in our store. So some of the objectives are like that, and we are waiting for the first quarter was low because of low footfall, unpredictable weather, etc. So let the footfalls come in. If we see a good response, then we have to decide accordingly how much to scale up. Okay.
And also, are we foraying into premium segments through our own products? I mean,
Yeah, we have, like I mentioned in my in my speech also. So we have certain sub brands. We have British Walker, which is leather shoes. So we have actually launched many designs in that also. Those price points. It's not only about the price point. It's crushed leather British Walker shoes we have launched. Natural leather. So these are very premium leather products. These start from 3,799 and go up till a little more, 3,799 plus. Okay, so these products we have launched in select stores. So in British Walker we have given such products to capture that consumer also, that premium consumer. And we have another sub-brand called Sharon in our ladies category, where we have provided lot of value-added ladies designs with California construction products. So those are also have been having a good response for some time now, and now we think the time has come to increase the options in that also, in the Sharon products. So these premium stuff we are doing in British Walker, Sharon, Skechers, but we also remain focused on volume growth. So we are keeping our prices competitive in Khadim's and providing some discounts when the thing is soft, the demand is soft.
Okay. Thank you, sir. All the best.
Thank you. We take the next question from the line of Sukrit D. Patil from Eyesight Fintrade Private Limited. Please proceed.
Good evening to the Khadim team. I have two questions. One is for Mr. Burman and this is for Mr. Indraji. So good evening, Mr. Burman. My question to you is, with demand challenges and profitability improving for Khadim, how are you planning to reposition Khadim for the next phase of growth, especially in tier 2 and tier 3 towns? Are you going to explore youth-led designs, digital-first launches, or regional influencer tie-ups that can help a strong brand story just beyond price and reach? What is the plan of Khadim for the next Q2 or Q3? I just want to understand that from you. Thank you.
For tier 2 and 3 shops, you are saying? Hello? Town. Yeah, for town. Yeah, so for tier 2 and 3 towns, like I mentioned, we have to be, it's a little price sensitive, those markets, 3, 4. So for that, we are launching products, like I mentioned, below 499 and stuff like that. And yes, we are doing influencer marketing. Just during any new stores opening, we are doing influencer marketing. If you go and see nowadays, the influencers are focusing a lot on the price point. I mean, they are going and saying that, oh, you get this at this price point, so they are focusing that so that, tier 2 and 3 people where they are a bit price conscious, the majority of the consumers, they get that messaging. So that's the thing.
I get the pricing part. My question was particularly, how are you doing the tie-ups with the influencers or the other things which I have asked to build a brand? Apart from the pricing part, how is Khadim trying to build its brand image, to be very precise?
Yeah, Khadim's is trying to build the brand by various ways. So if you see, like right now our festive catalogs ads have started in the newspapers. So we are giving a lot of focus on the sub brands now. We are like I mentioned a while back, Sharon, British Walker. We are promoting that also in the newspapers, along with the traditional. Like there are some ads, traditional catalog ad with price point driven marketing that we are doing, but while we do that, we are also promoting the sub-brands after a long time standalone, like in a standalone manner. And we are doing lot of, if you walk into our stores now, you'll see there's a lot of, POP material, that is product oriented POP material, that is there in our stores. Like we have got hanger, scroller, show window, discussing about this California construction that we are having in our Sharon sub brand. Then like the crust leather articles that I said in British Walker. If you go to the British Walker shelf, there is a special focus with POP material showing that. Then British Walker shoes also has got a comfort range where the insoles are very comfortable, the soles are little thick, and it's very comfort broad fit shoes. So that also we are putting POP material in our stores to enhance the brand, the sub brands.
Okay, fair enough. I get the point. My second question and the final question is to Mr. Indrajit in regards to finance. I believe sir is online today.
Yes. Tell me.
Yeah. So I just want to understand, as you manage cost and plan for growth, how do you, as a CFO, how do you decide where to invest or deploy measure of the capital, say between new stores or digital platforms and brand campaigns? What is the framework that you follow? I just want to understand that.
See, in regard to the opening new outlet, now we are presently concentrating on the eastern part of the country where the break-even is reached very quickly, and also some parts of southern part of the country where also the brand is fairly present. So at present we are not considering any expansion in the north and west where it takes times around 2.5 to 3 years. So we need stores where we are able to reach the profitability in the first year. So that type of stores we are investing. And in regard to digital thing, yes, we are doing digital activities. It's around the year we are investing in digital, and also we have shifted our e-commerce business from our own warehouse to e-cart logistics hub, from where our return has also reduced. From our warehouse it was around 30%, now it has come down to 20 to 21% return in e-commerce. And in regard to marketing, yes, we have reduced the marketing cost, but once everything improves, we will do the marketing for both brand building and for ATL and BTL.
Yeah, I think that is good enough guidance for me, and I wish the entire Khadim team best of luck for the next quarter.
Thank you.
Thank you. We take the next question from the line of Darshil Jain from RJ Investments. Please proceed.
Hello, am I audible?
Yes.
Yeah. So firstly, thank you for taking my question. And I have a couple of questions. So could you provide more insights into your store addition plans for upcoming quarter and maybe the remainder of FY26? And specifically, what is the expected number of new stores? Maybe a ballpark number would also do. And will the focus be more on expanding company-owned outlets, or would it be a franchisee-led growth? And also, additionally, what factors are influencing this strategy? Like, is it regional demand trend?
Yeah, I'll take this question. So this year we are opening we are opening some company-owned outlets, around 7 to 10 company-owned outlets, but more aggressive opening has been planned in the we have started this franchisees. We are TFM franchisees, so we are planning more aggressive store launches in that. Like this year we have already launched I will not be able to say the number, but we have achieved a good turnover from this franchisee TFM outlets that we have opened. Around 5 crores of additional turnover we have achieved. Okay. The number would be how much?
Around 12, 13.
12, 13 new TFM has been opened through franchisee model. So there we have added 5 crores of turnover till now, and we aim to open many more. Like we aim to open many more of this model. This is a model where you send the stock to the franchisee owner, and they get a commission, and so yeah.
Understood.
And you have good control.
Sorry.
Yeah, you have a good, like the expectation is that by doing this, you'll have a good control over your stock and everything.
Understood. And my final question is, are there any plans to introduce new product categories or segments like athleisure segment in the coming quarters that could maybe align with the evolving consumer preferences?
Athleisure too we have launched. If you talk about clothes, and in sport shoes we have in our own we have launched Skechers also, and in our own sport shoes also we have launched we have done a lot of studies, and we have increased our non-lacing range. We used to have like a big quantity of our designs were lacing, and non-lacing was a bit less. So now we have increased non-lacing range because that has a more acceptance by customer. So non-lacing range and lacing range would be around, I shouldn't comment on percentage, but we have just increased the non-lacing range also, and which also is showing a good response in sport shoes in our brand Pro. And we had launched some sneakers and all, the low price in below 1,000 sneakers. That also had a good show. And Waves, we have a brand called Waves, which is basically EVA products, where you have all sorts of EVA thong slippers, clogs. These kind of articles have also done pretty well. And we expect this. We have created, actually, if you go to our shops now, you'll see we have created a corner for Waves, basically this Waves products, which is basically this EVA thong slippers and all. We have done sort of communication, waterproof sort of communication, and we have kept the products there, and we expect this category to continue doing well for next several years.
Understood. That's all from my side. So all the best for your future calls. Thank you.
Thank you. We take the next question from the line of Isha Murthy from M&A Ventures. Please proceed.
Hello, sir. So in the opening speech, you mentioned that the quarter was impacted by muted demand due to unpredictable weather and global demand. So, could you provide more clarity on how this softened demand environment has played out, across different regions or store formats? For instance, I would say, were Tier 2 and Tier 3 cities more affected than metros, or did franchisee stores see a sharper decline compared to COCO stores?
We have seen the decline overall, but franchisee, it will be a little more compared to our COCO stores, because primarily since the franchisee is dependent on the stock that they purchase from us, since their secondary has dipped, the payment has also become slow, so they have been affected by some stock also. But the degrowth is more in the Tier 2, Tier 3 compared to the metro and mini metro.
So, sir, what specific steps are you taking to mitigate this softness in demand, going forward?
See, what we have done, we have given discount. We have provided more articles in discount so that our stock is also liquidated, and we have seen good rise in the discount percentage. As I told, from 18 it has gone to 33%. And this quarter means during the 15th August time also we have given the discount thing, and we have seen the sale has improved, but the margin will be affected because of discount. But in the festive we expect that the demand will be increasing and we will be not providing any discount, and also can protect our margin there. So we are eagerly waiting for the festive season, which is early this year, particularly in Bengal. The Durga Puja is in the month of September, and after that we have a Diwali and all the winter season where the demand is generally higher compared to the first quarter.
Yeah.
Okay, sir. Okay. Understood. Thank you, sir.
Thank you. We take the next question from the line of Riddhi Vora from SAS Capital. Please proceed.
Hello, am I audible?
Yes.
Yes. Yeah, so my question is that are there any other partnership or brand tie-ups in the pipeline for FY26 that we investors should be aware of? And could you share your criteria for selecting such partners, whether it is based on the product category or target audience or some geographic reach?
No, see, we have done certain partnerships, mainly in those areas where we felt that, we probably don't have those product exactly. So those areas we have done partnership, and see, Skechers has been a big partnership. I mean, Skechers is a partnership where the products MRP is also high, so I consider it a big partnership. But we have some other smaller partnerships. I mean, you can count that as a partnership, but it's just like the umbrellas. It's just to give have the seasonal demand met. Then we keep some VIP school bags, VIP. That's because, VIP, Khadim is a shoe brand. It's not primarily a school bag brand. So, the traction of VIP school bags is a bit stronger. So that's why.
Sock sector.
Sock sector we have
Jockey and Puma.
Jockey and Puma, some sporty socks. So these are the tie-ups which we have. These tie-ups are small, like all these VIP and that Jockey and Puma.
Okay.
Mainly the tie-ups are in different genre of product, not footwear. Footwear is the first tie-up that we have done with Skechers.
Okay. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, due to time constraints, we take that as the last question and would now like to hand the conference over to Mr. Omkar Bagwe from MUFG Intime IR for closing comments. Over to you, sir.
Yeah, thank you for joining us on the call today. I would like to thank the management for sparing the time and answering all the queries. We are from MUFG Intime, Investor Relation Advisors for Khadim India Limited. For any queries, please feel free to contact us. Thank you everyone and have a great day.
Thank you.
Thank you. On behalf of Khadim India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.